Welcome to this explainer. If you're in accounting, finance, or operations, you've definitely felt the ground shifting lately. And no, I'm not talking about just another Excel update or, finally mastering X lookups. We're all using tools like ChatGPT, we're chatting with AI co-pilots in our enterprise software, and we're relying on incredibly accurate invoice OCR literally every single day. But what is the actual engine under the hood driving all of this? Well, it's deep learning. So today, we're going to demystify exactly what that means and look at how it's completely rewiring our industry.
Okay, let's dive into this. Here is our practitioner's roadmap for today. We'll start with unpacking deep learning, move on to beyond traditional machine learning, and explore the deep learning boom. After that, we'll cover matching architectures to data, real-world finance applications, and wrap up with the human AI future.
Section 1. Unpacking deep learning.
There is just a massive amount of buzz and, frankly, jargon around artificial intelligence right now. So let's peel back the curtain. What exactly is deep learning? You hear the term tossed around constantly, usually making it sound like some kind of sci-fi magic, right? Well, let's strip that magic away right off the bat, because at its core, deep learning is a highly logical, highly structured process.
Here's the formal definition. Deep learning is a subset of machine learning based on artificial neural networks with many layers that learn useful representations directly from data. Okay, what does that actually mean in plain English? Basically, it loosely mimics how biological neurons fire in the human brain. Instead of a programmer sitting down and writing out explicit step-by-step rules, if X happens, then do Y, the neural network takes in inputs, passes them through interconnected nodes that have varying weights, and spits out an output. By repeatedly training on massive amounts of data, the model automatically figures out which inputs actually matter.
And you might be wondering, why do we call it deep? It's actually not a philosophical term. It literally just refers to the many hidden layers stacked together inside the network. See, earlier machine learning models were usually pretty shallow, maybe just one or two layers, which severely limited what they could understand. But by stacking dozens or even hundreds of layers together, something amazing happens. The early layers pick up on super simple, basic patterns. Then the middle layers combine those into something a bit more structured. And the deepest layers, they detect those highly complex, high-level concepts.
Section 2. Beyond traditional machine learning. Now, what's really interesting about this slide is the contrast. To truly grasp why this is such a game changer for finance and ops, look at the difference here. Over on the left, with traditional machine learning, you're the one doing the heavy lifting. A human analyst has to manually engineer the features. Imagine you're building a fraud detection system. You literally have to hand code variables, like transaction frequency, average purchase size, geographic distance. It's incredibly tedious work. But on the right, deep learning just skips that whole manual step. Feed it the raw data, and the neural network automatically learns those representations and patterns on its own. It figures out what variables matter without you having to spell it out.
Section 3. The deep learning boom.
This begs an obvious question. If the math behind this has been around for decades, which it has, why didn't we have these fancy AI co-pilots 20 years ago? Well, it came down to a perfect storm of three distinct catalysts. First up, more data. The explosion of the internet and digitized enterprise systems gave us the absolutely massive data sets these models need to actually learn. Second, more compute power. The rise of GPUs, or graphics processing units, dramatically sped up training times. And third, better algorithms. We saw massive breakthroughs in optimizing and something called backpropagation. Without this exact trio, especially the massive data and the crazy compute power, the large language models we rely on today simply wouldn't exist.
And hey, we can't talk about compute power without talking about the cloud. GPUs are wildly expensive, and training these models takes an unbelievable amount of compute. That's exactly why enterprise AI relies so heavily on cloud enablers like AWS SageMaker, Google Vertex AI, and Microsoft Azure AI services. These platforms are absolutely crucial. They let finance teams scale up infrastructure, process massive workloads, and run real-time predictions without having to build, a billion-dollar server farm in the corporate basement.
Let's move to Section 4 and see how this builds, matching architectures to data.
Now that we kind of get how neural networks learn, let's look at how specific structures are actually matched to your real enterprise data. Think of this as your visual cheat sheet. First, we've got convolutional neural networks, or CNNs. These are amazing at computer vision, processing images and visuals. If your AP software is scanning an invoice and pulling the vendor name and tax amount, yeah, it's likely using a CNN. Next are recurrent neural networks, or RNNs. These are your go-to for sequences and time series data.
They look at historical dependencies, which makes them absolutely perfect for predicting cash flows or forecasting customer delinquency over time. And finally, transformers. These are the engines behind modern LLMs like ChatGPT. They use these clever attention mechanisms to process text and figure out context, making them incredibly good at drafting complex financial memos or generating MD&A commentary.
Section 5. Real-world finance applications.
Theory is great and all, but how does this actually hit your desk today?
Well, in the realm of reporting and tax, AI is taking on a staggering amount of the grunt work. Deep learning models can analyze giant trial balances and summarize variances in seconds. They're generating draft disclosures, whipping up initial MD&A commentary, summarizing dense tax research, and even drafting technical accounting memos. But, and I literally cannot stress this enough, while the AI does the heavy lifting, your professional CPA review remains absolutely essential. The AI is a powerful assistant for sure, but it does not replace your professional judgment.
Over on the FP&A and operations side, predictive modeling is a total game changer. We're seeing deep learning used for incredibly accurate revenue forecasting, demand planning, and inventory optimization. For instance, the source material highlights a pharmaceutical CDMO, that's a contract manufacturing organization, that's using AI to predict production bottlenecks and identify yield issues before they even happen. I mean, imagine having that kind of foresight. That is a massive competitive advantage.
Finally, Section 6, the human-AI future.
Okay, time for a quick reality check to bring this explainer home. We have to talk about the risks and the limitations. One of the absolute biggest hurdles we face in finance is what's known as the black box problem. Because these deep learning models have millions, sometimes billions of parameters hidden inside those layers, they can be nearly impossible to interpret. We know what the AI output is, sure, but we can't always explain exactly how it got to that conclusion. And for obvious reasons, that lack of explainability is a massive roadblock for auditing, credit risk assessments, or any strict regulatory reporting where a clear trail is legally required. Beyond the whole explainability issue, we need to be realistic about AI's limitations. It is not a magic wand. First off, it's extremely data hungry. These models need massive datasets with really clean labels. If you try to train them on a tiny dataset, they're going to overfit and just fail in the real world. Second, high compute costs make training and running these models pretty expensive. And maybe most importantly, data governance. AI learns from historical data. So if your company's old data is full of calculation errors, missing entries, or biases, well, the deep learning model is just going to reproduce and even amplify those exact same mistakes.
So the crucial point here is this. The idea of fully autonomous accounting, where robots just run the whole finance department completely unchecked, is totally unrealistic. The future operating model is firmly rooted in human plus AI collaboration. Things like professional CPA judgment, governance, strategic controls, and auditable approvals, those absolutely require human expertise. AI is here to augment the professional, it does not replace them.
I want to leave you with this final, incredibly empowering thought from our source material. AI will not replace accountants, but accountants who understand AI, automation, and enterprise workflows will likely outperform those who do not. Deep learning is rapidly becoming the beating heart of the modern finance operating model. The shift is already happening right now. So the only question left to ask yourself is, how are you going to use it to transform your own workflow? Thanks so much for joining me on this explainer, and as always, keep learning.